Hello, you guys. Welcome back to Laptop Trader channel on YouTube. Just share my experience about the stock market and investing. Again, my email contact is laptoptraderphil@gmail.com. Caution, most stock traders lose money. Please protect yourself at all times. Nothing discussed in this video is trading or investing advice, okay? Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. So this is just going to be a quick update before my primary video next weekend. I wanted to go over some charts with you because there is some interesting stuff going on in the markets. So there's a couple themes going on right now. Number one, what did really good last year is not doing so hot this year. And two, there's been some rotation where large institutions move money from one sector or one industry to another. So those are a couple interesting themes. But right now, Bitcoin has been about flat for the last 3 months. There was some selling last week, and then on Friday, there was some buying in Bitcoin. But we'll see if that can continue. I personally don't trade Bitcoin, but just as information. Okay, so let's take a look at the SPY ETF for the S&P 500. We are slightly lower than we were 3 months ago, and basically a trading range between about 610 and around 575. It's kind of a big sloppy trading range. We had some significant selling over the last week and a half. Okay. Friday there was a wide range green bar showing that buyers kind of stepped up. And let's see, it's a similar story in the NASDAQ for the Qs. The Qs have sold off a little bit more, actually making a new low on Friday before reversing. The equally weighted Qs, similar story. And IWM actually is in like a new downtrend, new low on Friday. And the Dow Jones Industrial Average ETF, a little bit of relative strength when we look at the monthly chart, but still has sold off from over the past week. It had a nice close Friday, but there's definitely some weakness in these indexes, okay? And then transports are more of a sideways trading range. But I want to look at, real quick, some monthly charts. I think this will give you a little more perspective on the markets overall. Okay, so this will be an overall monthly chart of the SPY. So we're still in this uptrend, and made a new high in November, sold off December, kind of reverse course in January, and now February we made a new high, but we finished kind of in between. So this is looking more and more like a potential stage 3 top. Okay, that's what I see. Now, we're still in an uptrend technically, so anything can happen, but that's what it's looking like where we're at with the overall S&P 500 market. Early, very early, and not for sure. No, there's no guarantee on that, but stage 3 top is what it's looking like. The NASDAQ Qs, again, we made a new high in December, but left a topping tail. And then January, we had kind of this in-between candle, which kind of made a low and came back. And now in February, we made a new high, but again, we left a topping tail. And we made a new low versus January and December. So this is looking more and more like we're trending down, okay, even though we made a new high. Again, possible stage 3 top, nothing confirmed yet. The equally weighted Qs, right, look a little bit better, but again, left a topping tail in February. The small cap index IWM, which measures 2,000 stocks, is clearly being sold. Right, no question about that. New high in November, reversal red candle in December, and then continued selling. So this is looking more and more like downtrend for these small cap stocks for the moment. The diamonds, Dow Jones Industrial stocks, actually look pretty good. Still fairly strong uptrend. Yes, we're selling in December, buying in January. Now we have this in-between candle, what's called a doji candle, which doesn't really give any clear direction in February. So that, again, it's still an uptrend, but be cautious of continued selling, okay? And finally, transports, fairly weak, just kind of made a new high in November and we have not been able to make a new price high since November. So that looks pretty negative for transports. Now, let's go to some areas of interest. Okay, so let's just look at these 11 ETFs which measure sectors. Okay, so energy is in a clear sideways trend, right? Been in the sideways trend since, we'll say, November 22, so a couple years, right? And this large red candle here in December, doesn't look very good for energy. It could reverse, but I would not be really looking for energy stocks at this time, unless you know of something that has promise. But basically still a sideways trend. You could look at that as either a stage 3, a range type of trend, or even, something along those lines. But no real clear indication yet for energy, okay? Financials, still in an uptrend. Made a new high in February. That actually looks pretty good. And banks, my understanding is that banks have been doing okay. So financials are in an uptrend. That looks okay for financials. So that may be an area to look for investing or trading opportunities. Consumer discretionary has been selling off since December, and we left a nice red candle for February. So that looks like lower prices, although the uptrend is still intact, but short-term selling and consumer discretionary. Healthcare looks like it may make a turn up, still in a overall just a big range for healthcare. Technology, these are see, we made this new high December, selling in November, now a topping tail for February. So that looks negative for technology-based stocks. Utilities, looks like they may be almost like a buy setup here, where it looks like it's trying to get going up. So there may be some opportunities there in utilities. Industrials are still in this, again, made a new high in December, but kind of sideways since then. The materials sector is clearly weaker than the others. So I would say materials don't look very good right now. Communications sector, still very positive, still an uptrend. Made a new high, price made a new high in February, but with a very small bar. So that looks like just when you see that, everything here kind of looks like about the same size bar. And then we get the small bar, it's like the momentum, the buying momentum has just stopped. So that's looking like, for now, just still a clear uptrend, but there's not as much enthusiasm for buying those stocks in communications. Consumer staples now has interesting pattern where you get this red, green, red in December, then a bottoming tail in January, and then a reversal bar in February. So this looks positive, right? This looks like prices should continue higher in consumer staples. And basically looks like the buy setup in one of my videos. What I call a 3-bar term, we get this red, a bottoming tail, and then a green reversal bar. That looks very positive for consumer staples pricing going forward. And finally, real estate, also looking like, we've had this low, long-term low, higher low, and now this is looking like this is going to do the same thing as consumer staples. So I'm showing you this because real estate, okay, consumer staples, And stuff like utilities are like defensive areas, and healthcare would be a defensive area, okay? If money continues to rotate or flow into these areas, that means the large institutions on Wall Street see economic weakness ahead. So they're playing defense right now. They're not playing offense, and we can see that with consumer discretionary. There's been some selling over the last 3 months. Financials is a key part of the market, but that can be both defensive and a growth area. Right now, it looks pretty good, and energy is kind of flat. So your main growth areas would be consumer discretionary, okay, technology, right? We've had some selling there over the last 3 months, and communications would be another growth area. Now, communications still looks very good, but I also want to show you guys some other stuff that's going on, what I would call under the hood of Wall Street, okay? So under the hood, things don't look quite as promising, especially when I look at some daily charts. So those are overall trend stage monthly charts, okay? So when we look at the SPYs, you can clearly see some selling over the last week. Again, same with NASDAQ Qs, selling over last week, even though Friday was, more of a buying day, but IWM is in a downtrend on the daily chart. Dow Jones Industrial Diamonds, you can kind of see more of that stage 3 right there. This kind of move up, and then sellers kind of took over right there and pushed prices down. Transports just like the sideways trend. Try to show you. This is a small cap stock that it's very small cap, but it looks like it has some potential to go higher. That is Grove Holdings. Marathon Holdings, which is like digital assets, is in a downtrend. This is a mortgage company. You can see because of this long-term moving average, this red line. So you can see that's been a long-term downtrend. It looks like this is trying to make this turn up. We've got an all-time low, higher low, and now this looks like this could turn out to be just slightly higher low also. But I would be bullish on this over 650 on United Wholesale Mortgage Corporation. So if that's okay, if mortgages are still being sold, then I think that's a good sign for the housing market and the economy. This is another real estate company. Real estate, again, is a defensive area. This had like this double bottom, big move up on earnings, and has went sideways ever since. This is one I actually hold right now, and that just made a new high on Friday, so that looks positive that has come out of this long-term downtrend, that red line, okay? Transportation UPS, still in long-term downtrend. It's had some recovery from a poor earnings report, not much. Pfizer drug company, sideways bottoming trend. Tapestry, which is, I believe, fashion, still in an uptrend. This is a communication stock, still in a downtrend. NASDAQ, the company, looks fairly positive. It's been a long-term uptrend. And then it had this wide range bar in earnings. Since then, it's been sideways, but if it could get over probably this 83.5 area, I like NASDAQ, the company, symbol NDAQ. Energizer Battery Company, downtrend. Cardinal Health, this is healthcare. So this has been an uptrend, but it's still kind of doing the same thing, right? Here's higher low earnings. It was kind of a, nobody really won between buyers and sellers. Now it's been sideways. It's holding price above the 20 and the 50 moving averages. Nice close on Friday. So I like Cardinal Health going forward as a defensive play. I don't like that one. Intel Corp, I would not get too excited about that. Long term, that stock has been really damaged. although over the last month it has had some positive pricing for Intel Corp. This one has been sold off pretty hard, VERX. And this one is one I wanted to show you guys. So this had earnings performance of stocks right now that are not having positive earnings performance are being punished. I'll show you this quickly. So minus 9% from the previous quarter, okay? Clearly being sold off, okay? Into earnings. Stocks selling off into earnings, that's never a good sign. But let me show you the long-term chart. This is a stock, if I held, I would be out of immediately based on that alone. This is a monthly chart. Look, it looked great until this earnings report came out and then it just got crushed. So that's one to stay away from. VERX. It is in the software sector. So software right now looks kind of weak. Okay. So that's that. Let's take a look at some other ones here. Okay, Zscaler is also software. Kind of sold off the last week. So this is an energy stock that's been selling off. This ETF POTS, which is more of a technology ETF, selling off over the last week. Fiverr, must not have had a good earnings report. Sold off after earnings. Looked good in earnings and then sold off after earnings. So now that stock has been damaged. American Superconductor, trading below all the moving averages, sold off over the last week. So there's been a lot of selling in these small cap stocks and in different industries. Elf, just like a beauty company, is in a downtrend. Organogram, I believe that's related to cannabis, downtrend, selling off. Zoom company, right technology, selling off. Blockchain, selling off over the last week. Actually, over the last 3 months, really. This stock here is showing a little bit of relative strength. VF Corp. This one I'm in. So I do have a holding in VF Corp based on the longer term chart. Okay, so you can see there that made this low May 24, and since then has been on a slow trend up. So not a fast moving stock, but sometimes slow and steady wins the race. So under the hood, there's definitely some selling going on. Okay. This is one I actually like. This is a Chicago Atlantic Real Estate Finance. This is a real estate investment trust or a REIT, which specializes in loaning money to companies in the cannabis sector. And so it's basically a real estate trust. It's based in real estate for that industry. So that's one I kind of like right now. This is, I believe, also software selling off. Perfect Corp selling off over the last couple months. Datadog selling off. It looked good for a minute 3 months ago. Now it does not. Pure Storage selling off after earnings. Uber, I actually like long term. It seems to be holding up quite well under all the selling pressure, but anything's possible. But Uber, I am a long-term holder. Uber, AT&T looks great. DoorDash is the leader in that delivery space. It still looks pretty good, but I think just due to market pressure, it's been also selling off over the last week. Walgreens, Boots Alliance. It looked good for a minute, and then that top and tail bar on Friday does not look good. I actually was looking at a chart of CVS, which I don't have here. I may actually buy some CVS. Curiosity Stream is some sort of streaming service for entertainment. That looked okay until Thursday and Friday, so I'm not so sure about that right now. And finally, consumer staples. I bought into this sector because one, it's a defensive sector. Two, it's showing some relative strength to the market. And three, the companies in the sector have been really sold off hard over the last couple of years. So there's a lot of value right now in this sector. You won't really see it on this chart, but a lot of the companies have been in downtrends, really bad downtrends too. And now it looks like this sector is turning around. I'm going to show you one final list of charts and then we'll wrap this video up, okay? So watch list, we're going to go to prepackaged food and beverage. This will give you a better picture of like consumer staples or stuff that people buy over and over again every week or every month. So here's Coke, right? Long-term downtrend based on the red line, bottoming pattern, gap up on earnings and hasn't looked back. So Coke looks really good, okay? Pepsi, bottoming pattern, double bottom, earnings, it actually gapped down on earnings, but then has recovered nicely. A little bit of a buy setup here on Pepsi. Keurig Dr. Pepper, again, long-term downtrend, double, triple bottom, move up on earnings, a little bit of buy setup possibly. Dollar Tree, right? Not looking great, but long-term downtrend, a pretty clear bottoming pattern. Hershey Company, crushed over the last several years, starting to slowly move up in price. But now let's look at the monthly charts. I think the monthly will give you a better perspective. So let's go back to the first one, Coke. Coke, look at that chart. Hasn't done much in the last 5 years, but it pays nice dividend. It's making this very strong move in February. You can see the selling over the last 4 or 5 months, and then February, it's just money is moving into these defensive stocks. Pepsi, still in long-term downtrend, but volume is definitely starting to come into the stock there. You can see that large volume. So, Keurig Dr. Pepper, basically sideways for 5 years. Volume starting to come into Keurig Dr. Pepper. So, Dollar Tree's long-term downtrend. I would wait for that. Hershey, beaten up. Used to be a high on Hershey was 276.88. Currently trading at 172. So definitely sold off pretty hard. Pretty valuable company, really, for it to sell off that much. McDonald's, just one of those stocks that seems to be a perennial winner. Again, making new highs in December or November. Wide range green bar here in February. So McDonald's is a pretty safe place to put your money historically. Wendy's is the reverse, not a very good stock. Yum Brands. You can see money rotating into Yum Brands clearly. Wide range bar on volume. New high in February, right? Starbucks. Selling in December, buying in January, buying in February. Looks like Starbucks is probably going to be headed towards new highs. Bellring Brands, nice uptrend. Pfizer, bottoming pattern. Monster Beverages, sideways pattern. General Mills, still in a downtrend, but money has been flowing into that stock, so that's a watch and see. Kellogg's Company, now Kellanova. I think I need to update my charts because that should be, I think they'll rename the company. This was bought out or merged with somebody back here, but really price is not moving. I may have to update that chart. Mondelez Company, well-known large food distribution company in this downtrend, but possibly reversing here in February. Post Holdings, sold off January, December. Reversal bar here in February. So that's like cereal and other stuff like that for Post. Tyson Foods, clearly see stage 4, stage 1, probably very early stage 2, or just a sideways trend for now. Cisco, big sideways trend, nothing much to say there. Vital Farms, looks like that's actually selling off. I don't like that. McCormick and Company, very slight uptrend over last year. So that looks like just a safer place to put some money. Celsius, I talked about this in last month's video. Big volume coming into Celsius in February. So if that could turn up, that looks pretty good for Celsius. But money is definitely rotating into safer areas. Let's see if I have anything with healthcare for you guys. Maybe healthcare would explain that too. Here's healthcare pharmaceutical companies. There's only two there. I'm not going to show that to you. It's a waste of time. But money has rotated out of these big companies for the most part. Right. Microsoft has been selling off over the last few months. Okay. Still a great stock, but selling off. Amazon, wide range red bar there in February. Google, right, wide range bar there in February. Okay. Nvidia, selling off over the last 4 months. Meta, still strong, made new high in February, so that's probably one of them stocks that just seems to be it's a Wall Street favorite. Netflix new high, but with a topping tail. Tesla selling off over the last 3 months. Apple new high in December. January left a red bar with a bottom tail, and then February a green bar. That actually looks okay. It's still in this uptrend, but under some market pressure. And finally, Bitcoin. Definitely has kind of that topping pattern look to it, doesn't it? So if that doesn't turn around or price gets below 78,000, I'd be very concerned about that. I don't trade it anyway. There's no problem with Bitcoin. There's no real volume to it. In the whole month it traded 6,200 shares in February. So it's just too thin of a stock. It's too expensive and not my cup of tea. Anyway, let's conclude the video there. I think that's enough for you guys to concern yourselves with. I hope that helps you. I hope it keeps you out of trouble. Many of my holdings have definitely stopped out there in February. Again, we'll show you those monthly charts for the top ETFs. So that's what they look like long term, right? SPYs, Qs, small caps, industrials, and transports. Keep those 5 on your list. That'll give you a great clue as to market direction and overall market trends. Thanks for watching. This is again Phil, the Laptop Trader, and I wish you good trading. I will be making my main videos next weekend, so this is just a market update. Bye now, guys.